In the days leading up to 9/11, there was unusual market activity indicating possible foreknowledge of the attacks that later entered into the peer-reviewed literature. With regards to the stocks of the very airliners that crashed into the towers, the Commission stated in a single footnote that it was highly suspicious trading on its face. However, they dismissed it by stating that the individual involved had no conceivable ties to Al-Qaeda. Paul Zaremka, an econometrician and editor of Frontiers in Econometrics, has been concerned about the lack of discussion regarding academic studies critically examining this topic.
First of all, you shouldn't even be presuming that Al-Qaeda did it. I mean, if you're doing some kind of investigation of how it happened, you don't presume anything. Now, what happened on the data on American Airlines and United Airlines are that both stocks, coincidentally, were around $32 a week before 9/11. And then afterwards, the stocks fell from around 30 to around 18 when the stock market opened 1 week later. So obviously you can make a lot of money if you had had a put option on either American Airlines or United Airlines, okay? That's just the data. That's just how things work. Okay, the question then becomes whether there was an unusual level of movements in put options in either of those stocks before 9/11. A put option is one of several methods that you can take advantage of knowing something that's going to happen to a stock price before it happens, anticipating that it's going to happen, and if it does happen in the direction you expect it to happen, then you can make a lot of money. When I say that you can buy a put option to be able to sell a stock later, you're buying the option to sell. You're not selling, you're buying the option to sell, okay? But if I have bought the option to sell, I can also sell my option to sell, okay? So the normal data that you get in publications adds those two together. And then they look at a ratio of that total quantity to another thing which is called a call option, which is the opposite of being able to sell a stock. It's the option of being able to buy a stock. That gives you a put-call ratio. That's publicly available. Professor Podosman is from the University of Illinois at Champaign-Urbana, and he was given confidential data by the Chicago Board of Options Exchange to investigate the issue about whether there was insider trading on American Airlines and United Airlines stocks before 9/11. When I say confidential data, I mean he was actually given exact transactions, which I'm going to argue is significant because the public data are not that detailed. Then he made an analysis on put options which occurred in these two airlines, and he focused on the days before 9/11 up to 9/11 itself. But Podosman was able to look at the individual call and put options and distinguish that which was a sale from that which was a purchase. So in other words, he had clean data the rest of us can't really get a hold of. And from that data, he then made an analysis of was the pattern, the levels in which there was selling of put options, or excuse me, buying of put options, was the level of the buying of put options extraordinary in the days before 9/11 or not? And that's a statistical question of which there is no 100% answer. I mean, any statistical question is a probabilistic statement. His final conclusion is that with probability around 99%, there was insider trading on American Airlines and United Airlines. It was published in the Journal of Business. The Journal of Business is a peer-reviewed journal in which if they get any article, they have to send it out for review from other scholars in the fields. It obviously is a very mainstream publication, whatever you want to call it, business school publication. So it's an outstanding place for such a publication to have appeared. But what's amazing is that I've never seen an analysis afterwards, and now we're more than 4 years later. I still have yet to see anybody counter his work, and yet it's extremely important work. I mean, you would think. I mean, I have been an econometrician. I know how this work is done. If you publish anything that's particularly interesting, some other people are going to make other articles from a contrary point of view, or criticize your data or methodology or something like that. For example, if you do a study of what is the cause of crime, or you're doing a study of does capital punishment increase or decrease the probability of crime, well, you got a lot of people in those articles, and they have to take different positions, and some of them are extremely critical of the other one. In this particular case, this is deaths of 3,000 people, and nobody's contesting his results, which it may mean that they're unobjectionable, but I don't believe that. I think it's more that people are scared to even discuss it. I don't know. It's remarkable to me that normal business school or econometrician, faculty members in departments of economics haven't gone after the paper. It's almost like they prefer to ignore it than to discuss it.